The first thing he's going to do is going to have an income tax attack. So he's going to be attacking the income taxes. Hi, my name is Kevin A. Malsh, Pine Financial Group. We work together so you succeed. Hey, you found us here on Facebook, you found us here on YouTube. Please hit like, hit subscribe, and leave some comments below. We'd love to interact with you, especially on a topic like today, which is a little bit controversial. And it's quite frankly a little gray. We still have a lot of information coming out about it, so we don't really know how this is going to go. But I want to speak to you today about the Joe Biden tax plan and what impact it's going to have on real estate investors. Now, we have an election coming up here in November. I don't necessarily like either of the candidates. I'm not endorsing either of the candidates. But what I am saying is one of the candidates has a plan that could impact you. So I wanted to just discuss that briefly. So Joe Biden has been very, very transparent that he wants to attack the wealthy. He wants to have the wealthy pay their fair share, whatever that means. And so he's going to do that with several different tax changes. The first thing he's going to do is going to have an income tax attack. So he's going to be attacking the income taxes. Now, again, this is only for the highest income earners, but the first thing he's going to do is increase the tax bracket on that top bracket. So it's for $400,000 or more in a year. You're going to see a slight bump in that bracket to almost 40%. It's like 39.6%. Or something like that. So that's going to have an impact for sure, but it's not going to be dramatic as some people might think. He's also going to limit, or the Social Security tax. Let me mention that first, then I'm going to go into the deductions. The Social Security tax, once you hit $136,000 or a little over that, the Social Security tax goes away. Well, he wants to bring that back for incomes at $400,000 and higher. So up to the 136, you'll pay your Social Security tax. Above that, no tax until you get to 400, and then you pay tax again. What is it? About 12.5% in tax that will be shared between the employer and the employee. So that's going to be a big one. Now we're talking about 6-ish% increase in taxes at that tax level just for the Social Security. Now the deductions, he's going after the itemized deductions, which a lot of Americans aren't using itemized deductions anymore. A lot of them are getting forced into the standard deductions, which has actually been a benefit for lower and some middle class. The itemized deductions is what, quite frankly, a lot of the higher income earners and wealthier taxpayers are using. People with big house payments and lots of interest or lots of personal taxes, things like that. What he wants to do is limit itemized deductions to 28%. So I don't necessarily think there's going to be a big impact on this either. But what we could see is a reduction, a significant actually reduction in charitable giving. So a lot of wealthy people will give money away to charities and use a tax benefit for that. Well, if they're only capped at 28% and they can't deduct anything above that, I think we might see a reduction in some of our wealthiest givers giving to charities. So we'll keep an eye on that. So overall, the income tax attack isn't really that significant in the tax plan unless you're at the $400,000 in income or higher. The other thing is the corporate income tax. We're going to see that increase also. The downside to that could be loss of jobs and loss of wages. So we might see a reduction in the amount of money people make because corporations are paying in a higher tax. So all of that, not that big of an issue for real estate investors, but what is going to attack or going to affect us real estate investors? So Joe Biden wants to go after capital gains, and he wants to go after capital gains in a big way. We've probably seen this in the media. We've seen the headlines. We've heard about it. He wants to eliminate capital gains, but here's what we haven't heard that much of. The elimination of the capital gains, and this is long-term capital gain, which is taxed at a much lower rate than your ordinary income or short-term. He wants to eliminate that for incomes at $1 million or higher. So at first you're probably thinking, oh gosh, that's not me. Or many of us might be thinking that's not me. I'm not going to worry about it. But think about this. If you're making $200,000, $250,000 a year as a household, and then all of a sudden you sell an asset or 2 or 3 assets in a single year, that could easily push you at $1 million or over $1 million. And then all of a sudden your income is at the highest tax bracket and you're not getting the benefit of the capital gains tax. So now you're at almost 40% on that capital gains, which is going to impact real estate in a big way. I think we're going to see a lot less transactions, especially on investment type properties, apartment buildings, commercial space, that kind of thing. But he's not done there, you guys. He also wants to eliminate the 1031 exchange. So this exchange where we could defer taxes on the sale of assets and use that to buy more real estate or bigger and keep growing our real estate portfolio. He wants to eliminate the 1031 so you'll have to pay taxes as you go. So that's one that's going to affect most of us real estate investors, I would think. And then the final one is the step up. He wants to eliminate step up. If you don't know what the step up is, when you pass or when you die, you move the property, whatever assets in your portfolio, you move your properties over to your heirs. And the benefit to them is their basis steps up to the current value. So let's say you have a $200,000 house, to keep it simple, and it's been depreciating years and years and years, and so it depreciated all the way to zero, and there's a zero basis on it, and you move that asset to your heirs. Right now, the heirs have a basis of $200,000. So if they sell the property for $200,000, they'll pay zero in taxes. And that's how it's been for a long, long time, you guys. Well, he wants to eliminate that. So you pass your basis along to your heirs, which means that they would have a basis of zero and they would have to pay capital gains on the full $200,000. A strategy that a lot of investors have used over the years is 1031, 1031, 1031, keep deferring until you die, move all the assets to the heirs where they could sell it and pay no capital gains on it. So he's trying to, we call it defer till you die, right? Joe Biden wants to close that loophole. So I think those are some important points to understand with the Joe Biden tax plan as we get closer to the election here in November. It is going to raise a lot of money, a significant amount of money for the country, and we need it after all this money we've been spending with COVID and the stimulus and all of this. So we're talking about $4 trillion in benefit to the United States, but that doesn't come for free either. There's going to be a cost. So there's been some studies on the tax plan, and they're thinking that it's going to shrink the economy for one. I think that would be obvious. It's going to shrink wages of almost 1%. Not that big of a deal, frankly, in my opinion, for the amount of money it could generate. So shrink the economy, shrink wages, and the big one is it's going to cost nearly 600,000 jobs. And that's the one that no one's going to really talk about except maybe Donald Trump. But yeah, this kind of tax plan, especially the increases on the higher income earners and the corporations, that will decrease employment. And so leave me your comments below and let me know what you think. I don't want to get into a political debate here. Quite frankly, I don't necessarily like either candidate. Like I mentioned, I have no idea who I'm going to vote for. But this plan will have an impact on real estate investors. And so that's why you're watching the channel. Let me know what you think. Check us out, pinefinancialgroup.com.